In today's episode, we will be going over something called premium and discount. Okay. Now, when you walk into a store, okay, you want to obviously look for things on discount to buy. Okay. If something's on a premium or maybe at its normal price or maybe raised a little bit due to high demand, typically you don't want to buy it and then the demand eventually goes down and then they put it on sale. Same thing in the market. But how do you actually draw a discount or premium range? Well, there's a lot of visuals. Again, just to show you how easy it is to search up like discount, premium, ICT. I'm going to search it on Google and you can just find tons of visuals. I have some myself. I'm not sure. Again, you might like other people's better. It doesn't really matter. Um, and yeah, it just depends. So you can clearly see that it's just a kind of tool where it separates half and half of the leg, putting half in discount, half in premium. Okay, and you can find a lot of videos, whatever, regarding this. All right. So what actually is discount or premium though? How do you draw it? All right. So what you want to do to draw discount or premium is you want to look for an impulse leg. Okay. So if I see something like this, this is an impulse leg. We have an obvious swing low, obvious swing high, and it makes this really nice leg here. All right. Now I want you to, on TradingView, go to your fib retracement tool, draw it out, double click it, and just have the 0.5, 0, and then 1 on. Okay, this is how you're going to draw a discount or premium. And you can obviously save this as a template if you want. And yeah, I know some people using like OTE, so that's another kind of fib setting, which I'll go over in another video. But yeah, just have the 0.5, 0, and 1 on. I typically do not use a 0 and 1 because I already know where I draw it from, but for the sake of this video and teaching you guys, I'm going to have it on the 0 and 1. So what you want to do is you just want to draw it from the bottom to the top, okay, because it's a bullish impulse leg. All right, and honestly, no matter if we're in an uptrend or downtrend, with a typical fib per se, what you're probably going to do is draw it. If we're in a downtrend, you want to draw it from the top to the bottom. And honestly, it doesn't really matter if you just have the 0.5. But the proper way to draw it is from the top to bottom in a downtrend. The proper way to draw it is a bottom to top in an uptrend like this. Okay, so you can see that it creates these two halves. So these two are going to be considered zones. All right, so I'm going to do a green zone here, and I'm going to do a red zone here. All right. Now, why is this important? Well, it's important because this green is actually your discount, and then this red is actually your premium. So typically, as ICT traders, we want to try to buy in discount as much as possible, and we want to only try to sell in premium as much as possible. This also means we don't want to buy in premium as much as possible. So even if you don't want to take a short, you shouldn't buy here. Maybe you don't want to take a sell here, but you also shouldn't buy here. Same thing here. You don't want to sell in discount, and maybe you don't want to buy in discount either. That's okay. You just don't do anything then if that's the case, right? If you think the bias is bearish, but we're in a discount, it's definitely much riskier to sell. And I like to rate setups, and a lot of my B setups that I rate are short setups where there's a lot of times what'll happen is there's equal lows or something down here. So let's say there's equal lows and it's a good liquidity pool. A lot of times some people miss the move up top and then we get in the discount and they're like, oh, should I still sell here and go for these equal lows? I mean, you can, it will work, but it's definitely more of a B setup because it definitely is a lower win rate and you ideally want to short in premium because that's going to be your best shot at shorting. I do short in discount sometimes, but it had to be really confident in the draw on liquidity, or like if we have equal lows, I maybe will short. It just depends. So I say there's two ways of drawing premium discount. Okay, there's two ways. The first way is kind of just drawing it from like a 1 minute lag where you're actually trying to enter. So you might be in the 30-second time frame, you might be in the 1 minute time frame, and you're literally just drawing it to look for literally an entry. The second way is drawing it like in the higher time frame and just looking at the range as a whole. So, for example, the first discount the premium range I actually will draw here is this low to this high. So you can see we put in a nice swing high here. We've kind of topped out a little bit, so I would definitely draw this 0.5 now. And right here, I really wouldn't want to look to take buys yet until we came or tapped that 0.5, and then I'll look for buys. You can actually see a perfect example. If we look at the 15-minute time frame from Friday, okay, and you look at this 15-minute swing low all the way down here, okay, right here, and you draw, that's the start of this impulse leg. You draw it from this low to this high. You can see that actually price comes down, taps the 0.5 perfectly, goes a little below it, which is okay because it's a discount, and then bounces right away. So if you're ever looking to take any sort of buy in a fair value gap, try to make sure it's in discount, okay? This is going to be your best bet. Now, you're probably wondering, like, in this situation, okay, in this situation, let's look here. Let's say you see this nice impulse like down, and you're like, okay, well, I'm going to look for a short on premium. Okay, well, it has to make sense with the narrative. So in this situation here, we go back to premium. Okay, we reject a little bit, but when we come back up the second time, we kind of inverse this fair value gap. So this fair value gap kind of gets broken. And that's important to note because it doesn't make sense to shorten premium, especially after the bearish fair value gap in premium gets broken. And ideally, when you're longing a discount, you want there to be a fair value gap. And ideally, when you're shorting a premium, you want there to be a fair value gap as well. So it doesn't make sense to keep shorting this area after everything here is already broken because that just doesn't make sense. It doesn't fit the narrative because clearly this is bullish price action. The other thing you got to be careful of is if we've already taken out some liquidity or something, which in this situation here, we took out a ton of major lows. We're very low, and you can see like in the higher time frame, if I drop discount the premium from like here to here, you can see we were in discount on this time frame here, obviously. If we're very low, it doesn't make sense for us to reject a smaller time frame premium range such as this one because we're already coming out of like a larger time frame premium. And again, ICT and what I'm teaching you is not for the weak-minded, okay? What I'm teaching you is going to confuse you because you're going to be like, well, what if we're discounting this one, premium this one? You're going to understand after years of doing this, okay? I don't understand this either at first, but your first goal is to look for the drawn liquidity, and then your premium discount kind of comes along after. So let's say I come to the market and let's say we're here. I'm like, okay, we're kind of already came up here. We're kind of relatively low compared to like this range as a whole. Like this range as a whole, we're kind of relatively getting low again. It looks like we're back in discount compared to this range. It doesn't really make the sense or shorter retracement if we got one here. And that would personally be my thinking process. And that's where a lot of people are going to go wrong. Because like, well, Dodgy says we have an impulse like here. We must short the premium. But you have to watch higher time frame. Make sure we're not in any like discount or premium in the higher time frame, and understand where we are, what liquidity is swept, where the draw might be, and this high here is actually kind of a normal wick. It's kind of a big wick, and I never explained this last video, but this is actually a very good liquidity pool. It will be targeted a lot. Especially this is off of a data, so this is a data wick I call. It's off a Red Folder News, and if you haven't watched my One Setter for Life video on YouTube, I talk about these here. But you can see that this would have been a good liquidity target, so it would not make sense to short on premium here. So it has to make sense to short on premium for sure. So here you got another impulse leg. Okay, you got an impulse leg here. So from this high to this low, and you can see the market comes up right to premium up above the 0.5 and then rejects perfectly. Now, something to note here is there's not really a fair value gap here to short. Okay, you can see in this leg we're not really directing a fair value gap. So I likely would not actually take. Okay, I would actually not likely take any short here. Okay, because it doesn't make sense because there's no fair value gap. So what would I maybe take? Well, what you can maybe take is you can see we get a second fair value gap, which is right here, this bearish gap here. You could take a short off of here instead, knowing like, okay, we just came up to the 0.5. We made another bearish gap. We're actually in the 0.5 on this new range. See how there's a new range? And then I would take the short in here because it's above the 0.5. And then the higher time frames also rejected in 0.5. And the higher time frame is also way in premium. So like from here to here, it's just were very high at that point. So like 3 different time frames were in premium there, and it would make sense to short. So that's kind of what discounted premium is. We'll go over a few more examples. Typically, if you ever don't see us retrace to like discount on the higher time frame, so obviously here we kind of got the small wick here, which this is where it can definitely get very subjective because some people might use this, some people might do this, some people might do this. The higher time frame here is definitely I think this is the most obvious high we have. I think you could see this on like the hourly time frame, but you can't really probably see this in the hourly. You can't see this in the hourly. So I would personally, like, as a bigger range, I would actually draw from here to here. Obviously, you could draw it from here to here if you wanted, but I think this is the best one. And if you ever don't see us retrace to the premium after going down, that means the market's really, really weak, and you can kind of see how much we dump after. So if you ever see us not retrace to a discount or premium, that means the market's really strong or weak. Okay. Now, another example would be like, let's see here. So here we create a nice impulse like here from this low, this wick, to this high, and you can see we kind of go to discount a couple of times here. So here we bounce, and then here we bounce, and then finally we kind of go back to discount again. And honestly, this is a weird situation because I actually would not look to buy here. There's definitely a certain depth in discount or premium you look for the price to go where you actually wouldn't buy anymore. This is really deep, and it would not make sense if we saw a candle this deep in discount. It would not really make sense for me to buy anymore. So this is kind of something I'd probably miss out on, which is okay. But you don't really want to see us go that deep in discount and then bounce. Typically, this is like the best range. But if we go any lower than that, typically we'll go to that next low. Okay, so that's something to be careful of. Same thing with this. We got a nice impulse like here. We just dump all day. If I draw a discount the premium from this high to this low, you can kind of see every single time we get the premium, we get some sort of reaction. Okay, so you can see how much on premium price wants to dump. And again, you can get away with shorting in discount, but you have to be very confident that draw on liquidity is lower. And here it clearly was not. So that's going to come with screen time. Okay, no one's going to tell you that, but that's going to definitely come with screen time, and that's that. Another really nice impulse like here from this low to this high, come up, perfectly tap the 0.5, and then go right back to the high. So you can see how beautiful that is. And the wickier the reaction out of the 0.5 out of that fair value gap, the more bullish you're going to be. You don't really want to see us kind of stay here. You want to see us get like a nice kind of reaction to a place like that, okay? But you can clearly see you can experiment with this and draw a discount on premium. The thing I will say is don't get confused like, oh, what if we're on premium on the 4-hour time frame, but discount on whatever? It doesn't matter. It just depends on where the draw on liquidity is. Like, I could go to the 1 minute time frame and you could just draw a short, simple discount the premium like from this low to this high. And you can see we go hit that 0.5 and then bounce right away. Same thing with like this impulse like here from this low to this high. You can see we go onto that 0.5, bounce out of a fair value gap and go back to the high. So you can use discount the premium on all time frames. What I will say is I will use it typically for entries on the 1 to 5, but anything above the 5 is just mainly used for bias and like a kind of better confluence. Like if I want to short, I make sure we're in a 5-minute premium zone, or if I want a long, I make sure we're in a 15-minute discount zone. Just that's how I use them. So that's just to summarize discounted premium. Again, very, very useful. Will save you from bad trades, especially if you're not shorting in discount. You'll save yourself from a lot of bad trades. And that is it for this video. Peace.